Hey traders, Jim here. Today I want to go through the SoFi trades that we talked about quite a bit last week, the possibility of me getting put these. And I did. And so on Friday I put two contracts of SoFi at 17. I talked about what I was going to do with those trades if I did get put and about three different ideas that I had. And so I made my decision this morning and I made money on them, made a lot of money on them. So let's go and take a look at the trade journal. And before we go here for a second, I want to pop over to my live account, which is right here. And in this live account, I want to just take a look at the SoFi. And let's go up to a couple of things I actually want to show you here because it's pretty neat. If you go back and look at some of my first videos, some things right now, if you take a look at this overall profit and loss, this was minus 3,000 a week ago. Now it's minus 300. So as the market's changing, that's why I said to you guys, don't look at this number. Keep an eye on it. Know that your stocks are down. You know, that's your profit and loss from your stocks, but also from the fact that they're holding your ask price against you for every option that you have. So this number is going to be different than what you see over in the trade journal because of that. They're not the same number. But just again, we're up almost $2,800 from where we were here. Really neat to see that. So let's go to the SoFi and take a look at our filled order today. So we sold two Novembers, and I'm going to talk about why I went all the way up to November and got $305 a contract. So I made $605 on a $17 stock. Okay, let's go back over to OptiTrades and take a look at our trade journal. And let's go to our shares. And you'll see that we have two SoFis here, $17 strike prices. We got put those on Friday for $17 each. Now, our cost basis, I don't have that on here, but it's pretty low. I think we got 80 cents on one and 60 cents on the other on the puts. And that wasn't bad for the price of the stock itself. It was a good return. So now let's go back over to our open positions, our covered call positions, and we're going to see our two SoFis right there. Today, I came in and made these. You just saw that on my live account, my real account. Of course, I'll block out my account number, but that's my real account. And I made $304 each. Now, you've seen me do something similar to this with SMCI when it crashed on us, and it put me in the money. I was doing great, even after the big crash. Okay, and I just did the same thing with SoFi. So originally, I was put SoFi at 22.5, and I wrote a 23 call out to May 15th on this one because I wrote it from February 13th. So that was far enough out for me to get 136 bucks, 24% annualized. And then I started writing more puts on this, cash secured puts on it to dollar cost average. And we just got put two more, and it's awesome. I'm going to go over the dollar cost average in a second. Great money on these. You can see this is 30%. And why wouldn't I write in November? Why would I ever try to write a weekly on this? I would have gotten no money. I might have got 20 cents out of it, right? And I could have got 97 cents out of a 45-day out. But I got $3.04 to sit until November and do nothing. All right. I don't have to worry about these. They're in the back of my mind. I don't care where they go. I made 30% annualized on this. Okay. On the rate of return on just the trade for the time frame was 18%. Okay. I mean, you're beating the S&P by far. You've got a 30% if you can repeat this again next time when we get to November. And that's not including the money we made on the put. So these numbers are low significantly because we also made really good money on that put. Now let's go to SoFi. And if we take a look at all of our positions in SoFi, the unrealized here in OptiTrades, as I was stating over on Thinkorswim, their profit and loss is not just the stock drop. It's also the ask price they're holding against you and whatever else you might have in your account. For us, this unrealized profit and losses is only the stock price. There's no options in this. So we're now down 600 bucks in SoFi. Okay, we know that. Stock's down. Stock's at 1686 right now. We got the one contract at 2250. And it's also showing the negative from the 217s to the 1686. It's not a lot, but that's also negative. So we're down 590 bucks. We've made $1,136 in premiums on it. That means my net minus my unrealized profit and losses is $546. Now, I want you to think about something. This number moves fast. This stock could run right back up. We don't know. I talked about this in another video. Trade your range. If the stock today is 25 to 30, you trade it. If it drops to 15 to 20, you trade it. You trade your range, okay? And the ways to get that range caught up, and we're showing that here. Now, If I take the 217s, two contracts, and add it with the 2250 and divide it by three, our price per contract now is $18.83. When I add in all the premium we've made to date, it's another $1,985. It's not. So here's what it's not adding in. We've made $1,136 in premiums, but that does not add in. This is only either closed or covered calls. It will not add open puts. And it won't do that because we might be put another 100 shares. So that'll figure itself out once we close it. So that's why this 985 is different than the 1136. We have two open cash secured puts still left on SoFi. Or one or two, I'm not exactly sure. So now you look at the cost basis, $15.55. We're making money on this, and the stock crashed. Okay, again, I go back to the same thing that I said before. When you guys are writing your covered calls or making a decision whether to roll something, and this was not rollable. This was not one that I would have rolled. I wanted to take the stock and I wanted to get $304 out of it. So it was a great cover call play. And you have to decide. I've seen other rooms talk about other trading rooms, and I think it's disrespectful and I think it's wrong. There's no one right way to trade. You may say, I like weeklies. I don't. I like 30 to 45 days because I like the theta. I like the time decay that's on my side. I like being able to say, hey, if my covered call is going to give me 30% to write it 8 months out, I'm going to write it 8 months out. There's no premium on this near month. Okay. It also gives me something else, and we haven't talked about this, and I want you to think about this. If I went out to 45 days and I got a buck out of it, I've just covered myself a buck in case the stock drops. I just covered myself, in this case, $3 by going out to November. So I've got a lot of room, and I have a lot of time, and I have a lot of return for my investment. Okay. For me, this was the best opportunity and the best play. I won't look back on it. Doesn't matter what the stock does, and I won't have any emotions about it. And that's important. Okay. Second thing I want to talk about, and we've talked about this in other videos, is our returns. We give you the two options because if you look here, here's your current balance. You started at 70 January 8th, and now we're at 74, 359. We're only trading at 48% of the account. Now we're at 57%. So roughly 48 to, let's call it 40 to 60% of the account at one time. That's all I'm trading. The rest of the account's open and in high yielding money market. Okay. That keeps me in a place where if the market just completely blows out, then I've got money to go in and say, hey, I've got some stocks really cheap to write cash secured puts on. Okay. And I'll turn around and I'll do that. And also, for example, this Uber stock right here, I don't foresee me getting put this at 65, but it's okay if I do. If I get put this and it's at 55, I'll go right at 65. I'll find a place for it, take a look at it, and I'll keep making money on it. So it's important that you guys keep making money on the stocks that are in your portfolio for the wheel program. You don't care where the stock goes. Now, there's a time to write a covered call higher than the price you got the stock for. I don't see right now as the time. Okay. The market's very volatile. We got things going on overseas, and anything can happen tomorrow. So I'm going to stay closer to the money and I'm going to get my money. And let me tell you, if anybody tells you any different, you just go look at what we're looking at returns here. Okay. The return on the portion of the account that's in use is almost 40% annually. The return on the entire account with this part not in use, and I am not adding in my high yielding money market in 4 point some percent. That's not added into these numbers. So this is low, is 23.69. What else is not added in? And if you use the standard accounting methods, we would be saying, hey, this number would be more like 31% because I'd be saying, hey, you're going to compound everything you make every time you make a trade. And we will do that. But we're not adding it in here because I want this to be very conservative. That's assuming you stay with the same amount of money and we go forward from what we have. If you compound this up so that everything we make, this number goes to 31% on the entire account. These are huge returns. All right. And that's one of the things I love about getting put stocks is I can get covered call prices that are just outrageously crazy, right? We are doing it at the money or very near the money, but it just makes a lot more sense. So the other thing, if we go down and look at this unrealized profit and losses total, remember this was $2,800 last week. Go back and look at the videos. Now we're only $1,700. And I said it back then. This number to me is not nearly as important as this number. Okay, my total profit and loss, this number right here represents the premiums that I've taken in. This number over here represents the stock prices that are down. That's it. No options in that. So we're down $1,757 on some of our stocks. I don't care. I'm making money on them. I'll keep making money on them. I don't care where this goes. with the exception if we had something like Arrive In, which I would have never gotten in that stock because they haven't got the screener to tell me to stay out of stocks like that. So now let's go into the adjusted. I think I talked about this. So current balance is 74,359. But if we adjust out the unrealized, because some of you guys like to see that, you say that's more honest. That's the way to look at it. You know my feelings on that. I think this number is not as relevant as this number. Okay. But if you look at this, the adjusted is 72,601. Okay, and that gives you guys an idea of what you can look at. Let's look at the income breakdown. I just added this today, by the way. I love this feature. Just coded this in. If you take a look at January 2026, that was first month in, I made $230. First month starting out, we started January 8th. Okay. And I had a trade that I rolled that I lost money on that I got a lot more money on the next one. And we captured that back in February or March. I'm not sure, probably March based on the number. But February I made $897. And we had a big month in March, 2303. That was the SMCI covered call month, and we made just a bunch of other stuff. And I think that's the role I also had on Netflix back then, that I lost 150, but I made back 400 on the roll. Now, if I go into April, April's just what we're not even quite halfway through, already up to 926. I'm going to get put another SMCI at 29 next week, unless I mean, it's going up right now, so I don't know, but I was hoping I'd get put that. In fact, I'd love it to be like at 28.50 and I get put and I can crank out a covered call at 32 or something and take some stock appreciation as well. But I don't know yet. We'll see once we get there. So, this is going to go up as well. So you can see this is going up and up. We're in great shape. Now, if I go and take a look at the income planner, I want to show you something else that I added that I think you guys will love. We have two buckets here, reserve and trading. So you come in and you put in what your account size is, what kind of withdrawals you guys want, if you want transfer frequency monthly or quarterly, from bucket 2 to bucket 1. Bucket 2 is what you're trading. Bucket 1 is your reserve. You can say, do you want your reserve to be 12 months, 9 months, 6 months, or 3 months? And you can say, I already have my reserve set aside. So this allows you to say, I have 300,000. I need to take a reserve out of that. But if you don't, and you already have your reserve, then you click this. Now I have 300,000 and I already have my reserve. So there's your next year's worth of money that you want to take out. You have 300,000. How much per month could you take out? 40, in this case, it's 4,500 based on, now again, you're based on 22%. I'd be conservative and I'm going to go 18. All right. And that way, if I beat it, I'm in great shape. I feel good. And then it'll take the money market yield on the rest of that. Okay. And then over here is the trade journal. This is cool. This is my account. Okay, so you can tie your trade journal account right up to this. So you can't cheat this one. This is going to be your trades, what you're doing. And let's drop this down. Let's see right now, if I did nothing else, how much could I sustain out of this? Let's do 1,500 and still sustainable. Let's go, I know it's somewhere around here, 1,800 maybe. All right, not sustainable, but yellow's not bad. Red's really bad. So this is saying that if I drew out 1,800 and I would have 1,800 a month at the rate that I'm going right now, I would have a shortfall of $3,090 per year, and we would last 11 years. All right, so now so that's too high. Let's go 1,600. So I could draw out 1,600. No, still too high. So it's like 1,500 was right. Okay, well, I'll take that. So $18,000 a year that I could draw out on a $74,000 account. This is a powerful tool, and make no mistake. And we're going to talk about this. I'm going to do an in-depth video on planning how to take your money out when it's time to, because too many people think I'm going to trade this month and I'm going to pull it out and live on it. And what they don't account for is the bad time. So having this set up to where you have a reserve, a bucket reserve set aside for trading and a bucket reserve set aside for living, you can say 12 months and we're going to pull out at 3 months. So I'm going to say I've got 12 months of reserve, and every 3 months I'm going to pull out my profits and I'm going to put them into my bucket for reserves. Anyway, that's it for this video. Hopefully I gave you guys good information on this. There's a lot of stuff to look at. Come over, sign up on OptiTrades, have some fun with it. Right now, you get a 1-month trial free, and there's a lot of free stuff we give away anyway, such as the calculator. If you sign up, you get the calculator. All right, have a great day. I'll talk to you soon.